Good morning, everybody. It's the 11th of the 11th. Happy Remembrance Day. Is it a happy day? Anyway, it's the latest
Well,
instalment of Talking Ball.
yeah, exactly. What number is it? We're close to 500, aren't we?
496 today.
496. Joe, we
Yeah.
got to get some photos done, haven't we?
Are we rebranding for 500?
Well, that was the plan. It doesn't look like it's going to happen though, because we were supposed to supply some photos about 2 months ago, and you just haven't been able to take a good one. So
No.
we've been held back.
Okay, we'll sort it out. Anyway, we continue to battle on with these podcasts, and hopefully people are continuing to find them useful. Let's get stuck into the market highlights today. So, front and center yesterday, the US consumer prices rose last month at the fastest annual pace since 1990. We saw inflation hit 6.2% in the States, which certainly put some jitters through the market yesterday. Although there was quite a lot of divergence, as we'll come on to, between what we saw in the UK markets and the US markets. As a result of the rising inflation yesterday, the S&P 500 and the Nasdaq fell by the most in a month. Bitcoin briefly flirted with the $69,000 for the first time, so clearly not phased by what it saw with regards to inflation. President Joe Biden did acknowledge that Americans are feeling the pressure of inflation and goods shortages, promising that his infrastructure legislation is part of his plan to overcome the extended effects of the coronavirus pandemic. In terms of what's going on the corporate front, Tesla CEO Elon Musk unloaded $5 billion of stock in the electric car maker in his first sales in more than 5 years, shortly after holding the poll on Twitter, which said he should sell 10% of his stake. So he's done that. The regulatory filings shed no light on whether Musk's weekend Twitter poll had any bearing on his decision to carry out some or all of the transaction, or whether he'll continue selling until the 10% threshold is met. We also had Rivian. Rivian, is it a new electric car maker on the block, which listed on the markets yesterday? I think it was slightly lower from its opening price. That's the Amazon and Ford backed company, which looks quite interesting. Back over to the macro side of things, the ECB could stop bond buying as soon as early next September if inflation looks to have substantially returned to the official target. That's according to one of the governing members yesterday, while Christine Lagarde has signalled pandemic asset purchases will end as planned in March. So there's no consensus on what will happen to the bank's conventional bond buying plan at the moment. With regards to what's going on the climate front, China and US vowed to work together to slow global warming, issuing a surprise joint statement yesterday that injects new momentum into the last days of global climate negotiations. The deal also marks a rare moment of cooperation between two superpowers locked in geopolitical rivalry. So that's pretty good news for all things climate related. So looking ahead to markets today, it's expected to be a bit of a quiet one, particularly in the US and Canada, because their markets are shut for Veterans or Remembrance Day, as we call it in the UK. And there's not much else out in Europe. So we are maybe going to take a bit of a pause for breath after a bit of volatility over the last 48 hours or so. So, Steve, let's get stuck into some charts. What is catching your eye today? Would it be gold by any chance? Or
We can come on to gold, but I'll start with the indices as you mentioned them. Uh,
yeah,
Interesting moves this
interesting. I
morning.
thought from the divergence that we saw yesterday, FTSE hitting new highs
Yeah,
and Nasdaq and S&P getting battered. Really?
yeah. We're seeing it a little bit this morning. FTSE seems to be sort of extending aggressively higher again, even in the first sort of the hour since 8 o'clock. Really, we've sort of spiked up, and we've triggered another short trade today. Looks a bit under pressure already. 73.65 trading
So
on.
just with the UK, Steve, we've had Q3 GDP out this morning falling to 1.3%, although the Q2 figure did enjoy a big upward revision from 4.8 to 5.5. So, obviously not putting the FTSE off at the moment. And in terms of the constituents that are, this is what we always have to look at with the FTSE, because it is made up a lot of these miners and oil stocks and banks. Now, obviously, banks are pushing higher today because obviously the threat of inflation, talking about raising interest rates, which is always good news for banks. So That's why I think we're seeing this big push higher over the last few days or so.
Yeah, very good point, Joe. And I think from a technical perspective, I suppose if you're just looking at technicals, it sort of just continues to show that divergence away from the other indices as well. So yeah, it feels like the UK are going to be the first before US as well. So yeah,
To
why
raise
not?
interest rates.
Yeah, it does feel like it. Um, However, it's a little bit different in DAX again. It's a bit of a different story in Germany. But we saw this interesting candle. I mean, I'm still short of this from yesterday. We talked about it yesterday. I got short, before the show, and I'm just sitting with it at the moment. Stopped just above the highs. But we saw the uplift yesterday, and the reaction lower very quickly gave up those gains. We're coming up to close this candle. It looks like a bearish candle. The spike higher and rejection. So that seems to be playing out quite nicely for me. CAC though is remains strong. So the FTSE and CAC on the European side of things are still strong as we move towards 9 o'clock. So potentially further upside, a little bit more divergence there. The Dow sold off, and on the hourly chart we've got a bearish flag forming. Let's take a look at the daily chart as well on the Dow. Obviously, we've seen the shooting star candle, what looks like a hanging man candle, not the greatest one because the body's quite big as well. But these two bearish days we've seen in the Dow, and we're approaching some support here, just around about the 36,000 level. That'll be good psychological support, and we expect a bit of a reaction there. Nasdaq has been a lot more aggressive. We've got this, if you sort of like fuse these two candles together, that's a nice evening star formation, and this has been confirmed again by a third negative day of price action. Obviously, the Tesla impact seen there. I don't know where Tesla is now. Is it below the $1,000 mark? I think we were looking at that. S&P's also has reacted overnight from the low of 46.32 posted yesterday, but really not able to kick on. We're getting a lot of potential for MACD crossover, momentum stalling as prices move higher. This is bearish divergence on a daily chart. So that still fills me with a little bit of confidence for my DAX idea. We're seeing it there as well. Aussie 200 had a decent spike lower, reaction higher though overnight, so that's looking slightly more positive. China has reacted from the bullish hammer posted yesterday, faces resistance coming in at 15,735, and the bearish momentum is stalling there. So looking a little bit rosier towards the Asia Pacific area. Again, the same with the Hang Seng, a positive day yesterday, not quite a bullish outside day, but very close to it, and we've kicked on higher overnight. So decent APAC return this morning. It's a bullish outside candle currently forming on the Nikkei, but we still got a little bit further to the upside on that. Looking at commodities, we've seen a really decent and aggressive sell-off in oil. Bearish outside candle on the daily chart on decent volume as well. So we did get up to test the bullish channel, the bottom of the bullish channel, but failed and reacted lower after we didn't break the resistance just below $84. On the Brent crude oil side of things, same candle, same sort of reaction. We've seen this. This potentially highlights the fact that the pressure from the inflation could have a negative impact on the oil price. Gold, though, wow, what a reaction we had yesterday, and we've been talking about this level for months and months and months and years and years and years. Well, we've been talking about it since at least early August, even before that, sort of like end of July, where we had a potential for a double top formation. Now this played out really nicely. We got hit the measured move target. However, then when we did hit the low 1677, we then rallied aggressively higher over a period of time, maybe a month, and we stalled again at this 1834 level and reacted lower. So again, we had this reaction lower, but we formed a higher low, and since then we've been in a bullish channel higher, which has found resistance around 18.15. Now, you can see what the reaction was like yesterday. We can even drop it down to an hourly chart to see exactly what happened when we broke through that 1834 level. We did highlight the risk of that fading into that level with a stop tight above would have been a major play for short-term swing traders, and obviously the break traders would have benefited very nicely from them stopping out, and the projection higher was pretty decent in that move up. We saw a 2-hour move. We saw a move of about $35. So reaction since then, we've had a pullback towards 1840 that will now provide support, and we look to be re-challenging this 1870 level. The real levels to watch above there, we'll jump to the weekly chart to show what we're looking at above. We've got 1916 above. There'll be a 1900 psychological level as well. But yeah, little in the way of resistance up to that point. So again, remember, we're talking about this bullish flag formation. We're seeing quite a nice break here. This flag can, the angle of this flag can change. We've picked up 2 resistance points, well, 3 resistance points, I suppose, if you take out yesterday's price action. And on the downside, we've only picked out like 1 real support point. So really, the angle of this can change and still be a flag if you sort of like think about where the next high is. So if we say this week we get a high at 1915, we can maybe adjust this. It's really about the bottom of the channel. A better point would be here, but we have broken that, so that might be a bit more of an angle to look at. But really, for me, the next key level is 1916 and 1917. A break above that will trigger this double bottom formation, which will have an extended move higher. Let's measure it, shall we? So this would be the measured move target of something like that. That would open up move to 2163. That's an all-time high.
So what do we think about that from a, I suppose, an impact on what's going on in global markets? Is this a situation where it's just a pure inflation play? People are sort of topping up on gold to hedge against inflation, or is it a safe haven play? People are starting to load up on gold because they're worried that there's going to be a jolt to the markets, or maybe a bit of both.
Yeah, I think there's a little bit of everything. I think it's more the inflation play. That's what I think. Dollar. What's dollar trading at the moment? I haven't even looked. Dollar index trading 95. You know, if the dollar index is trading 95 and you can see the dollar is moving aggressively higher, we're actually picking up on the dollar index. I know you're probably going to cover
Still
it,
in
but
my
we've
thunder
broken.
here.
Yeah, you've broken that level. So really, dollar moving higher like that should really result in gold coming lower. So it's not a dollar impact.
No.
But yeah, the inflation is what everyone's thinking about. And you know, you say it's just above 6%. That's rubbish. It's way more than that. It's just that's the numbers that we've been given. Inflation is way more than that. You think about what you're spending this time last year, and your spending habits haven't changed. If anything, they've gone the other way. You're probably saving at least something, or did do over the lockdown. And people are still sort of like concerned. People aren't going out and spending it on the things that really should sort of like have that inflation focus. It's energy prices. They're sort of like flying through the roof.
I
You
mean,
try
that's
and
not an inflation-linked issue, though, is it? That
no,
that's compounding it even further. So,
exactly. It's all about what we're spending our money on. You know, that's the sort of like the money we spend is the money we spend, whether it's sort of like included in a CPI and RPI, whatever it is. It doesn't matter. We're talking about inflation, and life is becoming a lot more expensive. Everyone can see it.
yeah.
We get the figures from the government, and the figures from the government are sometimes they suit the government. They sort of, I'm not saying they manipulate them, or am I? I don't know, but it's really about what, you know, raising interest rates. Is that going to stop me spending money on energy? no, it's not. I still got to heat the house. I've still got to
Yeah.
run the car. It's
Well, Christmas spending coming up as well. If there's certain products that aren't available, then there'll be higher demand for certain products, and they'll be at higher prices, and it'll all have a knock-on impact. And that's nothing to do with inflation, but inflation
yeah,
is also going to make those things more expensive.
it is. And you know what it's like at Christmas? You sort of like you end up panic buying when you can't get hold of one thing. You go and spend money on another thing. But I think people are in a different place. I think last year as pressed a little bit of a reset for a lot of people. So there's more thought that will go into it this year. I'd like to think. I may be completely wrong on that, but
Okay. Are you
yeah,
sparing your family there for
yeah,
disappointment?
it is. Yeah, I don't know. I'd rather hand them a premium bond rather than a premium Xbox or something.
Are they
So
hedged against inflation, premium bonds?
no, well, no, they're not really, are they?
Bar of gold then.
Yeah, maybe gold. That could be the play. Yeah, I mean, for me, breaking above that 1834 level is key. It's key also to hold on to the gains um, over the coming couple of weeks as well. If we do that, then this is a bigger play. And we're coming to the end of the year. Are we going to get the, that sort of like
Santa
end of,
rally,
end of year rally that we always see, the Christmas rally? We
maybe.
shall see. Maybe.
So, Steve, is crypto a inflation hedge? Could you hand your kids a Bitcoin each? Then they'd be doing
Yeah.
well, all right, wouldn't they?
Well,
A zero point
they
zero 0.01 of a
would have been.
Bitcoin.
Yeah, they could have been if I'd have bought it a long time ago. But yeah, I mean, Bitcoin for me, we got up to that 69,000 level. Again, another
So no
psychological level is
close
the
above that
70,000.
resistance yet on the
No,
weekly.
which is interesting as well because it's a shooting star candle. I know we had one a few weeks ago, but it will lead to that sort of, wavering thought.
Twitchiness.
Yeah, exactly. I mean, yeah, it's up at 65,000, and okay, it could like we've always said, yeah, it could be 100,000, could be 200,000, could be a million. It's sort of until it's adopted globally, it doesn't really matter. It's just an asset that people can trade or invest their life savings and lose that in it. It's definitely not something that I'll be investing it to hand over because it could be worth zero at any point in the future. It's not like something I can bite into, not like a lump of gold. That sort of stood the test of time.
When
Um, shall I run over the others? Cardano has rejected this rally. It stalled around previous resistance at 238. 247 for me was the high all the way back in May and the peak in September. And we've seemed to have posted another higher low, sorry, lower high, and rejected quite quickly. So the 69,000 edged it up and then slapped back down again. Also rejection on the Ripple. Naturally, if that sort of like follows Bitcoin a little bit tighter. Sorry, Ethereum, I meant. Ripple hasn't really been enjoyed as much. We had the reaction high 135, didn't quite get to the 60% fib, which is 141, and reversed sharply to 124, which it seems to be a little bit more comfortable around these levels. Around about 110 to 120 is the Ripple sort of like level. That's about it. Do you want to take over with FX, Joe?
Yeah, thanks, Steve. So, as you mentioned, there was a strong move yesterday on the dollar, so it wasn't the only big breakout that we saw. So, in line with gold, which often you don't see these two move together in that way, but this is the daily chart, so let's just take a zoom into what we saw yesterday. Breakout above this 94.74 level, which has been the all-important resistance that I've been speaking about for some time. This is the previous swing high from back here, which is September 2020. So huge move to the upside, really impulsive candle that we saw in yesterday's session, and we're holding on to those gains today, up by another 0.15% as it stands. So looking for those gains to stick. Any pullbacks towards that 94.74, I'm now expecting to hold as a support level and for new buying interest to emerge. You could also argue that we've got a nice big bottom pattern that's taken shape here, maybe a double bottom going by at this bottom here on the 6th of Jan. And then we've got another one on the 26th of May. He's even got another one in there at 26th of Feb. So either way you look at it, it looks to be nice sort of rounding bottom sort of price action, which is what you want to see if you want these uptrends to stick over a longer period of time. So looking at sort of measured move targets, I'm taking one measurement from the low here to that high there, projected higher. I've also done that based on this low to this neckline here that we've just broken, the 94.74, and projected that higher. Either way you look at it, it looks like there is some decent upside targets to look for on the dollar index. The first one being this 50% level here, which is at 96.09. So if we get a kind of move into this zone here, which is the upper end of this bullish channel and the 50%, then I'd expect maybe we'd see some profit taking in and around here. Ultimately, though, I'm looking for moves up to 97.72, then an extension of that up to 100 on the dollar index, which are levels that we haven't seen since back here in May 2020. So either way you look at it, bullish outlook for dollar index. And of course, that's going to mean that we've got a bearish outlook on euro US dollar. So this head and shoulders top pattern that I've been banging on about for months, still looming large over the price action. We're trading in a bearish channel on the daily chart. We broke through support yesterday at 115.24, again quite convincingly, in the same way that we did with that dollar index break yesterday. Smashed through the support, no evidence of any buying support or defense coming in, and we are moving lower again today by around about 0.12%. So lower end of the channel may find some buying interest. I should probably look for some other fib levels around here to potentially target. There's likely to be something in here that's going to offer some sort of support. But in terms of the medium to long term target, it's still down at this kind of region here, which is between 110.60 to 1.1000. So lots of potential downside still to come in the dollar index in line with that bullish dollar view. So looking at cable, a similar situation. We're breaking down through support again. 134.11 gave way yesterday. We closed below it, retested that level this morning, failed to hold, and we're pushing lower again, down by 0.15% as it stands. I don't envisage there being any change to this outlook today, given that it's going to be quite a quiet session with no US participation because Veterans Day and Remembrance Day. But looks like this is going to continue sliding lower towards my next Fibonacci target, which is 38.2, which comes in at 131.65. And that goes back to these lows that we saw back in March last year as a result of the height of the pandemic. The 38.2 would be a natural point of correction on that one. And given the way that it's continuing to make lower highs and it's breaking through these support levels to make lower lows, I think this is a good area to target in the short term, down to 132.00. So yeah, not looking great on the currency front. If you are backing against the dollar, that seems to be dictating everything at the moment. So higher prices expected from the US dollar. I am waiting for this to potentially play out, which is a flag pattern that we discussed in dollar yen. So really nice move to the upside. We've seen these periods of consolidation which tend to get resolved to the upside, and we see sharp moves higher. Wondering whether or not we're going to see the similar sort of situation here on dollar yen. We've seen a nice push high. So this would be the flag pole. This would be the flag formation. We saw a really big impulsive move higher yesterday, but unable to get above these resistance levels at 114.32. If we see a simultaneous break of that resistance and the flag, then that for me will be a really strong sign that higher prices will be seen. And this blue line is relevant going back some time, back to these kind of levels around here, which was back in 2017. So if we can overcome this resistance level here, there'll be a lot of fresh air for the market to move into to the upside, and we can start thinking about these 2016 highs, which are up at 118.71. So all in all, looking pretty bullish for the US dollar.
Nice one, Joe.
Okay, gun to the head trades from yesterday, Steve. We talked about this divergence in equity markets yesterday. I went short of Nasdaq and hit target on that one. Nice sell-off into the close of the US markets yesterday. It's bounced back a little bit, but yeah, really happy with that. 2.8R. You had a really tight stop on your China's trade, didn't you, Steve? So
I did.
Unfortunately, you got stopped out on that one, but I think it was pretty range bound, to be totally honest. It was just one of those sort of nipped you at the high, but yeah, all in all, good day for us. 1.8R net outcome, so we'll take
Yeah,
that all day.
makes up for the little bit of the last week we've had, or 2 weeks.
Yeah, we only need 1 or 2 decent winning trades, and you're back on track, aren't you? So let's
Well, if
hope.
you do 10-1 risk reward, you only need one, mate.
Yeah,
You
you got another
definitely
one
only
of
need
those
one.
up your sleeve today, have you?
Very potentially, yeah. I'm sort of really focusing on the oil chart. This really bearish move yesterday on decent volume. I'm looking for a bit of follow through. Obviously, we've got this channel in the 4-hour chart, which we've reacted down from, potential for further downside here. So on the hourly chart, I picked up on this bearish flag that we're looking at now. We can maybe getting short to 80.21. We could maybe have again another tight stop. What about 61? 61 does feel a bit tight, and really targeting a move down to 4-1 risk reward. I'll do it in front of the ATR band. A move down to 78.61. That's me getting short here. 80.21. Stop at 80.61. Target 78.61.
Boom. Okay, as with always, we do these on the fly. We've got a gun to our head and we've got to pull out a trade now that we think will work over the course of the next few hours. So just having a quick flick through the hourly charts, and one that caught my eye was New Zealand dollar, Japanese yen. So as you can see here on the hourly chart, it's been trading in a sequence of lower highs and lower lows. In the last few hours, or the last hour, we've seen a break below this support level here at 80.11. There was also a 38.2% fib level, and we go back to these lows here is where I drew that from, so back in September. So decent bit of fresh air to target on the downside, I think, down to 79.43, which is the 50% fib level. So a bit of a breakout trade today, seeing if there is any follow through on this. So we're going to go quite tight with a stop. Just above, in fact, let's tighten that up even more. Let's go 15 ticks. So getting short at 80.04, stop loss at 80.20, let's say, and then a target at 79.43. So looking for 4R on that one today, hoping that continues to follow through to the downside.
Brilliant.
That is that. So as mentioned, no big data due out today. US and Canada closed. We did have a raft of UK data, out this morning, which is all out of the way now. So there's nothing really for us to focus on. It's just whether, how investors are going to be around what we saw yesterday around the inflation numbers and the concerns about tapering. And, we are up at the highs in a lot of these markets. So, there could be some jittery investors around that are hitting the panic button and going to start folding on some of these riskier assets. And that could create some volatility. So I think that's something to keep an eye out for in the coming sessions.
Brilliant.
Anything to add, Steve?
No, nothing to add to that, Joe.
Lovely.
Nice roundup.
Yeah, good stuff.
Let's get out of here quick before I get stopped out in oil.
Yeah, all right, mate. Have a good day. See you later.
Cheers.
Bye.
Bye.